Hi, good week to all. This is Kelvin here again. Welcome to this week weekly technical outlook for the week of 31st of Jan to 4th of February 2022. So, as usual, I'll be covering the key technical trend bias for this week, as well as key levels to watch on the SPX 500, the Nasdaq 100, the Hong Kong 50, the Japan 225, and the German 40. So, as you all know, that last week has been a wild ride for the S&P 500, which means, i.e., the US stock market, and it starts to spook the rest of the markets as well, both in Asia and as well in Europe, even though Asia and Europe do not fall much drastic negative magnitude or downside magnitude as compared to the US stock market. So before we start, let's take a look at the disclaimer slides first. All right. Okay, so before that, I need to highlight that this week will also be a shortened trading week for Asia, for most of the Asia stock markets in general. So the only market that is trading is almost throughout the whole of the week will be Japan. Uh, Lesser trading days will be Hong Kong. So Hong Kong will be actually shut for the Lunar New Year holidays from tomorrow all the way up to Thursday, and they will be back actually on Friday, this coming Friday. So for Singapore, it will actually be closed for tomorrow, and it will actually remains closed until this Wednesday, and trading will resume on this Thursday onwards. Yeah, so definitely the US market and the European markets will remain open for this week. So now, let's take a quick look at the momentum analysis of this weekly performance last week. So what we could see last week over here is, well, pardon me, I didn't actually highlight it in the color code, which we could actually have a better visualization. But what we could see over here is that after the prior week of a very bad underperformance of the US stock market, and even though the S&P 500, the Nasdaq 100, the Dow Jones, and Russell 2000, uh, at the start of last week was very bad. They actually tumbled close to about 5 to 6% at the open intraday. So bear in mind that last week we have a very wild intraday swing between a positive and negative, and the volatility level was actually the highest that was not seen in the last close to 10 years. Close to 10 years, we have not seen such wild swing in the US stock market. But what's positive over here is all of them ended in the green, except for the Russell 2000, which it remains the weakest among the peers due to its highly concentrated of meme stock, as well as stocks that has lower probability and weaker balance sheet. So yeah, it actually minus -% for the week. But I want to highlight over here is the momentum. Momentum starts to turn positive for all the US benchmark stock indices. 2.52% for the S&P, Nasdaq 100 3%, Dow Jones 2.5%, and the Russell 2000 not too bad, 1.93%. So this momentum is taking into account of last week performance minus its prior 4-week average to give you the difference. So anything that's positive, what it means that momentum has starts to improve as compared to its prior 4-week average. It means the prior rate of change 4 week ago. Right. So what's interesting is Hang Seng. So Hong Kong, the Hong Kong index or the China related index, the Hang Seng index, the Hang Seng Tech Index, because probably it's actually due to number one, due to this long week of Chinese New Year break in the China market. So China market will be actually shut for this whole week. That's why you could see a bit of lackluster trading last week on the Hang Seng Index and Hang Seng Tech Index, which is down negative 5.7%, and the Hang Seng Tech Index is down close to 10%. So that gives us the weakest performer across the globe. But little on the highlight over here is that even though they fell pretty badly last week, but they are still holding above the key support level on the Hang Seng Index and as well Hang Seng Tech Index. Then you have the Nikkei 225, which is down close to 3%. The German DAX down by 1.8% over here. So also a kind of a pretty lackluster week on the Nikkei 225 and the European markets. But what's on the highlight over here is the turnaround on the US stock market actually came on the second half of last Friday's session. Okay, last Friday session. So what you could see is that before this turnaround actually took shape, all the rest of the global indices got spooked by this fear of further downside in the US market, whether they could actually close positive on Friday, which is very important. Why? Because the whole week they actually tested a very key major support on the S&P 500 as well as the Nasdaq 100, which I'm going to highlight you all later in my charts. Yeah. So now, before we start, like a quick recap on last week performance on the 11 sectors. So what we could see, what's one thing positive over here is that definitely the top of sector performer since the last 2 to 3 weeks has been the energy. So total energy has remained strong last week, up 5%. But what's interesting over here is that a quick reversal from the worst performing at the start of the week to become the one of the top performer, second ranking top performer will be the information technology stocks. We call it the information technology sector, which is we have 7 industry inside as well. Which include semiconductor as well as Apple. So definitely Apple has a high weightage. If you could know that, cut the story short, Apple actually has a very strong, we call it earnings report that was released on Thursday at the close of the US session that led its stock to very close to about more than 5% on Friday. So that actually has a positive feedback loop throughout the information technology center, and as well as a stabilizer, given the Apple's significant weightage inside this sector and as well as the general overall market. So cut the story short again, the most key thing over here is that they actually started at the bottom, close to the bottom, actually went all the way up, which actually, from a technical analysis perspective, it gives a potential positive feedback loop throughout the rest of the markets. All right. Why do I say so? Because the at the initial start of the market, the technology sector being the heaviest weightage in the S&P and S100 got spooked. Why? Got spooked by a fear of a quicker Federal Reserve hiking cycle. Yeah, so there could be an anticipation. People say that there could be 7 rate hikes in this year, possibility. Yeah, that caused a bit of spook in the market. But what I want to see over here is the prices that is telling us what is going on, and from there we could actually extrapolate based on a proper technical analysis approach to actually see how what's the potential directional it can go from here. So later I'll share with you on that. Okay, now very quickly is that one more thing I'll highlight is that this one I've been highlighting for the last 3 weeks. Why? Because this is an important chart, because this chart put into a relation, a correlation between the VIX index, which is a measure of fear, implied fear and implied greed of market participants. Cut the story short again. What is VIX? VIX actually I use it as a contrarian opinion indicator. A high level of VIX represents potential bullish sell-up on the S&P. A low level of VIX represents a potential multi-week corrective bearish setup on the S&P. So they move opposites. Why? Because a high level of VIX represents too much fear. Once there's too much fear, there's fear of capitulation. That means, i.e., too many bearish pressure until the last one get dissipated, where the bulls could actually come in and support the market again. So basically, this is how we look at things, taking into account the VIX and S&P that I'll share with you. So what's this chart is important because since June 2020, VIX has been kept by this major resistance line, which is at 32. And every time the VIX hits 32 level, the S&P form a medium-term bullish reversal on the 15th of June, on the 30th of October 2020, on the 29th of January 2021, and on the 3rd of December 2021, that led it to the current all-time high in November. And most interestingly, this level was tested, but it did have a daily close above 32 and it closed right below it on the 24th of Jan, which is on Monday, where we start to witness that first few hours of a dramatic sell-off that actually sell throughout the session and managed to actually rebound only the last 1 hour on Monday close. But then thereafter, if you look at Friday, the VIX actually closed below Monday's level, below Monday climatic selling level. So what it means over here is that the amount of fear in the system has kind of subsided and it starts to retreat off from the key 32%, 32 level, which imply that, hey, there is actually a chance that this 24th of Jan 2022 low could be the inflection point to actually kickstart a multi-week bullish up move for the S&P 500. Okay, so that's how I look at the charts from taking into account the SPX, the SP 500, and its correlation with the VIX. All right. So now, before we jump start, okay, so I already covered that. So let's quickly take a look at the charts now. All right. So go to CMC, this next gen platform. So before I start over here is that actually I just concluded, for those who missed, I just concluded my Q1 2022 global market outlook based on a technical chart. That means I look at longer term chart, weekly chart. So for those who miss it, I actually paste the recording to my Twitter account, my CMC Twitter account. So later I'll share with you where to find my Twitter account. There you can actually take a look at the Q1 2022 global market outlook and what are the key themes that we should be paying attention to in these first 3 months of the year. Okay, and last but not least, that Twitter account also covers daily commentary where I actually write about what's going on in the market, what may happen based on this set of information. So do give us a follow to actually allow you to keep up to date what's going on in the global market space. All right. So now very quickly, right? This is my weekly out. So this week so I use a weekly chart to actually have a forecast of what potentially could take shape on the SPX 500. So bear in mind, this 4240 is my key long-term pivotal support. So last week, it actually has a test on it on Monday. And what's interesting over here is that notice that it actually formed a bullish reversal weekly candlestick pattern after a very significant high volatile week that was actually not seen close to 10 years. All right. But it managed, the key thing, it managed to close above, tested and close above the 4240 and the 50-week MA and ended it with a bullish weekly candlestick formation. So what it means over here is that yes, we could still see potential up move on the SPX from a medium-term perspective, that means from the weekly perspective. But however, based on my Q2 2022 outlook, there is actually various reason why I highlighted that this last rally is a rally of hope and irrationality. So after this move is being dusted, there could be a risk, a possibility that the S&P will start to shape a 30% to 40% corrective move. That is a major degree corrective move, which could have a negative spillover effect throughout the rest of the world in terms of risk asset. More details, please take a look at my Q1 2022 weekly outlook video recording. Later, I'll share with you where to find it. All right. So now for this week's strategy, for this week's strategy is we go to the weekly chart. So what we are seeing over here is that 4240 definitely will be a level to watch, to hold. It must hold this level for this week in order for it to slowly drift upwards. And right now, what you could see is in today's Asia session, is now trying to reintegrate back above the 200-day MA that was actually taken below last week and it traded below almost all of the day of last week. And what's interesting over here is that the RSI starts to bounce off from the oversold region as well. Okay, so all in all, what it could mean over here is that from a medium perspective, this decline, okay, from its all-time high, okay, that was from its all-time high of 4818 printed on 4th of Jan 2022, okay, declined by 12%. So this 12% over here is a bit extra, we call it overdone in terms of momentum, overstretched momentum, where we could at least in the short term see a multi-week rebound towards this region over here. Okay, this way. So what is this region over here? This resistance. Okay, so let's take a look at the 4-hour chart to actually pinpoint the shorter term resistance level to give us a guide or where is the level we may be expecting for this week if it's possibly if it is able to drift upwards. So right now what we could see over here is RSI very positive. So this is a 4-hour RSI. So what it means that momentum has really starts to come in at least in the short term. Why? Because if you look at prior price action start to shape lower low, but the RSI remaining start to shape a bullish divergence. That means low didn't get lower. In fact, it get higher at the oversold level, and it did a bullish breakout from this corresponding resistance level. So this corresponding resistance level, you could actually put it in parallel with this lower high that's being formed in this 4 weeks of sell-off that we see. So this lower high on the RSI has already been taken out on the upside by this bullish breakout. You see. So being that RSI is a momentum indicator, rate of change, a rate of change has a typical what I call a bit of leading property that lead price action. So what it means that there is a chance that SPX may move higher at least in the short term. That means this week. So how high can it move potentially is as long as 4240 holds. That means there's no weekly close above this. Why weekly? Because this is a key pivotal support that I derive on the weekly chart. That means we need to have a weekly close. Only a weekly close below, then we could say games are over from a long-term perspective or as well as or we call it a weekly perspective on the directional bias on the SPX. So for this week, we do have a bullish bias on the SPX because given the positive elements that I highlighted earlier on. So as long as 4240 holds from a weekly basis, a break above the intermediate resistance at the 4500 level. What's the 4500 level? 4500 level is actually this former swing low area of 2nd of December and 4th of December broken down. Then after this broke down, it did a little retest, fails to break above it and shape this last drastic push down on last Monday. So a break above this level could take us up potentially to 45.90 in first step. Maximum 46.75 is actually the former ascending support from 4th of October 2021 low, now turned to a pullback resistance, and as well as the minor swing high area of 14th of January to 17th of January, and as well as a key Fibo retracement level. If I were to draw for your taking from the current all-time high all the way up to last Monday's climatic low. So this gives us at 61.8%, which is 45.90, and 76.4% retracement at 46.40.75. So you see a confluence of elements at these two levels. All right. So bullish bias potentially on the SPX as long as there's no weekly close below 4240. So if you have a weekly close below 4240, then there's a risk that we may start to kickstart this kind of a major corrective down move in first step towards the resistance, towards the next support at 4035 from a multi-week perspective. Now, very quickly on the Nasdaq 100. So very similar on the Nasdaq 100 as well. What's the key? So this is the weekly chart, which I actually plotted it or I showcased it during my Q1 2020 outlook. 13,900 will be the long-term pivotal support to watch. So what we see last week is actually did a test as well, but forming a dragonfly doji bullish candlestick formation, which is positive. So for this week, we are actually expecting the price to actually move up close to this resistance level over here. So later we go to the short-term chart to decipher what are this level. So very similar move to the S&P for this coming quarter is I still do potentially as long as 13,900 holds, no weekly close below 13,900, we could shape this last push rally of hope and irrationality towards 17,590 slash 18,150, the major risk level, before that potential negative 30% and 40% major corrective move kickstart. All right. So that we got to bear in mind when this last push up over here, it may not have it may not be backed by what I call solid fundamentals, but rather is a rally of hope and irrationality. All right. So want to find out the reason why? Because there are various fundamental data that are actually highlighted in my Q1 2022 Outlook video. So later I'll share with you where to find that video, so you're able to get a better understanding why I say that it is a possibility of a last rally of hope and irrationality. So now the daily chart very quickly again over here is that, so you could see that the resistance, right, that we may set for this week, that means this week potential rally or potential up move, as long as 13,900 holds, will be at 15,540. Very clearly, right, this is a former swing low tested, but can't break, can't go above and start to shape this very steep down move since 13th of Jan that led to that climatic low on last Monday. Okay, what's interesting is the 4-hour RSI managed to bounce up from the oversold level and a key corresponding support level close to the 24% level, just reverse upward. So what it means that this medium-term steep decline over here may also reach a climatic low where we could start to see a potential up move, at least in the medium term from this juncture. So for this week strategy, definitely 13,900 is the key support level as long as there's no weekly close below it. A break above 4,600, which was last week high. Despite its last week high, it did manage to break above this high and it just did a wild swing between 14,600 and 13,900. So if you could have a break above 14,600, potentially we could start to see a push up in first step towards 15,540, which are highlighted here on the daily chart. That's the graphical former support level, turns into pullback resistance. And in terms of Fibo retracement, if I were to retrace it from the all-time high of 28 of this, pardon me, all-time high on the 22nd of November, all the way down to Monday low, is close to the 61.8% golden ratio as well. So pretty significant, as it's actually confluence with a various technical elements at 15,540. So what's interesting over here is that short-term momentum definitely has turned positive from this bullish divergence earlier on, and as well as a clear bullish breakout from a former descending trend line resistance. So this former descending trend line resistance was formerly the lower high, which correspond to the lower high of the price index as well. So giving us a bit of a leading element that momentum has starts to resurface, at least in the short term, which could potentially see more bullish price action. okay, potentially. So as long as 13,900 holds, a break above this 14,600 may take us up higher towards 15,540. But however, a weekly close below 13,900 will invalidate this recovery scenario where we could see the start of this major corrective down move in first step to test the next support level at 12,970. All right. Now, Hang Seng. So this Hong Kong 50, right? Or Hang Seng, we call it. So last week it actually did. Like I showed you the earlier on that momentum table at the start of this webinar presentation. Hang Seng Index was actually the worst, one of the worst performer. Why? Because it could be due to liquidity issue, but liquidity because this week liquidity will starts to get lesser due to this shorter trading week for these CNY holidays as well. But however, right, last week for well, it actually fall right at the key retracement. Let me, oops, let me highlight to you all. Okay, taking from the low of 20th of December. Okay, do you see it fall right at the 76.4% retracement? All right, and also slightly above the 23,000 long-term key support level. Okay, so what's 23,000? Going back to the weekly chart again, 23,000 is this long-term pivotal support, which was actually tested at last late last year, which is the last 2 weeks of last year, but they managed to close below this level and form three long-legged dragonfly, long-legged bullish hammer reversal candlestick pattern. And yeah, this was last week. We call it weak performance. But what we could see right now is price action starts to turn positive again. So this 23,000 level is indeed a key support level to actually maintain a potential boost for the for the Hong Kong 50 or the Hang Seng Index. So why this level is important? Number one, it actually confluence of several we call it elements that is pointing at 23,000 Fibo retracement, Fibo extension, and most importantly, graphically, is the long-term circular ascending trendline support that kept previous down move since the low of the great financial crisis low, which is October 2008. And what we could see now is that momentum has already started to improve as well by this bullish divergence on the weekly RSI. Okay, so now going back to this week's strategy. So this week's strategy, right, given that we are in a trading shortened week over here, so I'm expect more of a sideways movement for Hang Seng, holding below last week this last week high, 27th Jan swing high that refused to surpass. Okay, refused to surpass this after this bearish breakdown on Monday. So 24,450 will be the short we call it the medium term or the week key resistance to watch for this week. So neutral between 24,450 and 23,000, which is the key long term support slash the excess, which is the low of 30th of December at 22,660. So, however, right, if we manage to have 4 hour close above 24,450, once Hang Seng is actually back into action on this Friday, we could actually potentially see a short-term push-up towards 25,200 level. So what's 25,200 level is in fact this descending trendline resistance that kept previous rebound since the high of 10th of August. All right. So now, very quickly on the next Asia indices will be the Nikkei 225 or the Japan 225. In short, we call it our platform. So for the Nikkei 225 or the Japan 225, right, highlighted in my Q1 2022 outlook is that the technical elements has kind of turned a bit bearish. So I actually turned mixed in my quarterly outlook for this 1 to 3 months. But what's interesting over here is that last week move, right, managed to stall at this lower boundary of my key support level. Okay, so very quickly, I go to the weekly chart. So the weekly chart, what I could see now is a potential impending double top. All right, and the RSI has really broke below the support level, but price action, right, refused to have a clear break below the leg line of this double top, which is at 26,880. So you could see this last week price action over here. So this 26,880 will be pretty key for level for us to watch. And right now, price action has starts to bounce off from this level as well. So for this week, right, so I slash it to the lower, which is at 26,880 slash 150. And the daily RSI also start to turn up from the oversold region that it did happen, like what happened in the past, on 8th of July, 1st of October, 1st of December. So all this turned up, right, in the oversold level led to what I call some form of rebound that's being seen. Okay, so what we could see over here is that it could potentially lead to another round of rebound within this impending top formation that is forming since its 35-year high that was printed on 16th of Feb 2021. Okay, so it's more like a push up within a impending double top bearish configuration that is still taking shape. All right, so that actually boils down also in line with what we were expecting in the last push up that is seen or expecting on the SPX 500 and the Nasdaq 100. Okay, so the resistance level to watch right for this week right is 27,800. So at least right have a bullish bias towards this first level. Then from there we see how the price action move. Okay, because this is a former swing low area that was taken down on 20th of December before giving this steep short-term push down last week, and also the pullback of this former ascending support from 20th of August low now turned into a pullback resistance. So we have a couple of elements that is confluencing at this level. And if you go to the 4-hour chart, what we could see over here is this level here is also, if I were to take the Fibo retracement, taking from the high of 5th of Jan, which is this last push down, it so correspond to the 50% and the 61.8% level. Okay, so pretty key on this level itself. Okay, so now what we could see is that as long as 26,150 key medium term pivotal support holds, what we could see over here is potentially we could start to shape at least a push up towards 27,800/900 in the first step. The momentum in the short term has turned positive as well. So this gives me a bit of increased risk of odds that there could be a potential weekly short-term rebound based on the positive configuration or sightings that is seen on the 4-hour RSI, bullish divergence, and a breakout of its former descending trend line resistance above the 50% level. So at least we could say that this last push down over here is a bit overdone and momentum has started to improve, where we could see the index at least in terms of price action to retest 27,800/900. But however, if you have a daily close or a weekly, I would say that a weekly close below 26,150, then we could start to see another round of or the start of a major corrective decline to test the next support level at 25,250 slash 25,200 level. Okay, so what's this level? If I were to draw the graphically, it's actually this congestion zone over here. And if I were to use the Fibo expansion of this ongoing so-called down move from 14th of September 2021 high, I project to the low of 6th of October. Oops, project it to the high of 5th of Jan. So what we could see over here is the one-time Fibo projection. Oops, sorry, it's this level here. Okay, to 16th of November, pardon me, 16th of November 2021 swing high. So this is the one-time pivot projection with 26.150, which I highlighted for this week key support level. The next level is 1.236, which is the 25,250 slash 25,200 level. Okay, now Europe will be represented by the German 40 or the German Dex Index. So what we could see over here is that last week push down managed to bounce off from our neutrality level, which is close to that 15,080 level mark, which is the former swing low area of 21st of December, 3rd of December, and the ascending trend line support from 6th of October. So what we could see over here is a since its all-time high on 18th of November as 5th of Jan, which is at the 16,280 level, it has been trading in this kind of sideways formation, okay, for close to more than 2 months or so. Coming, yeah, in fact, it's November. Yeah, it's close to 2 months already, coming to 3 months. So what we could see over here is that the RSI managed to actually now hit the oversold region and bounce off from it. So it could actually also be supporting at least a push up within this range of 16,280 and 15,080 level. So for this week's strategy, right, we are actually turning bullish from a neutrality stance, given that the price action bounced off from the this range support at 15,080 level. So what we're going to do over here is that using 15,080 level as my key medium term pivotal support, looking for a push up to first step towards 15,670, which is my upside trigger level as well, which is actually this short-term descending trend line for 5th of Jan that's kept previous rally. So a breakup above 15,670 should take us up higher, at least towards this congestion zone here, 15,900 slash 15,960. So what's this level? It's actually the swing high area of 5th of Jan 2022 to last week low, which is 14,838, the 76.4% retracement level. All right. So all in all right, okay, then if we start to have a 4-hour close below 15,080 level, then we could see a retest again back to 14,800. Okay, so all in all, right, what we could see is that last week of price action quite volatile, but the volatility managed to actually have a what you call it, some form of a bullish element has started to surface on these major stock indices that I highlighted to you all. Most importantly, the S&P 500 and the Nasdaq 100 managed to actually survive right at their key long-term pivotal support, SPX 500 4240, and the Nasdaq 100, which is at this 13,900. So as I mentioned earlier, for more details, right, you do follow me at my Twitter account, which is my official Twitter account with my CMC logo. So my Twitter account, right, you can actually open a Twitter account, it's free. Then after you, how to find me, you just type at Kelvin SC Wong. Then from here, you're able to see my stuff that is being published on my Twitter account. So my pin tweet, right? So this will be my recording for my Q1 2022 Outlook. And what do I mean is that I also, we call it showcase what I write every day. So this is my daily commentary on the markets and the things to look out for, together with technical chart as well. So I did highlighted about ARC. So ARC actually come close to a key support, which may also see a tactical rebound, at least a tactical rebound in line with the bullish bias that I have for the SPX and Nasdaq 100 this week. Okay, so all in all, right, whatever I share on, with my video, like this is a video as well. So this recording will also be pinned in my Twitter handle. So do give my Twitter a follow to keep up to date what's going on in the financial markets from a technical analysis perspective, blend it with a global macro approach. So with that, as we all know that today is the last lunar year of the ox, and tomorrow we actually be welcoming the year of the water tiger. So I wish everyone a good year of abundance and good health in the year of the water tiger, and 恭喜发财 and 万事如意. And I see you all again in my next video.